evening it is to you viewers. Welcome to Equity News on Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from Hampton Studios. I'm Ibn Mabunda.
And I'm Sandra Chororo. The Zimbabwe Regulatory Authority has revised the fuel prices effective today. Diesel is now costing $7.19 per litre, while blended petrol prices were raised to a maximum of $7.47 per litre. This is a 22% increase from the previous $6.10 adjustment done 10 days ago. Both petrol and diesel have remained in short supply and erratic for the better part of 2018 into 2019 following the foreign currency shortages in the country.
Econet issues a press statement highlighting power cuts affecting their ability to provide their services to their consumers. It was not business as usual over the past weekend as EcoCash systems were down, as well as Econet service provision were also neglected. In effect, there were power cuts that have affected their base stations. As such, this has actually seen a decline in their ability to provide their services across the board. Over the weekend, EcoCash could not be operational for several hours, as well as, of course, your ability to make SMSs and phone calls was impinged on as Econet bemoaned the effects of load shedding. In effect, what is actually taking place is a situation where the base stations have been hit by load shedding, resulting in them having to hire generators in order for them to remain operational. As such, they've issued a statement indicating that they may be forced to take alternatives, which of course they have not spelled out.
Ongi Mine recorded a 3% increase in PGM production for the first half of 2019. The increase was attributed to improved underground mining efficiencies, as well as improved concentrator throughput and mill runtime and higher recoveries. Also reporting a positive performance is Ongi Mine parent Anglo-American Platinum, which recorded a revenue of 42 billion rand for the first half of 2019, which is a 28% increase from the previously recorded 33.5 billion rand. The company benefited from strong market fundamentals, which saw the US dollar platinum basket price increasing by 16%, as well as a weakening rand, which led to the rand platinum basket price also increasing by 33% year on year.
Reserve Bank of Zimbabwe has issued an exemption to Multichoice to statutory instrument 142, which reintroduced the Zimbabwean dollar and obliterated the multi-currency regime which had been in effect for a good 10 years. Backdrop being local companies, particularly the banks, were now charging an additional amount to the charge that Multichoice was charging to its consumers. As such, the company has been granted that exemption to SI 142. In effect, what is actually playing out is a situation where Multichoice has started issuing SMSs to its subscribers, alerting them that they can now make payments in US dollars.
The Association of Bureau de Change Operators of Nigeria has called for an end to fuel and foreign exchange subsidies to address structural defects. The association, in its quarter economic review report for the second quarter of the year, said that the subsidies represent the structural defects in Nigeria. The president of the association said that the government should consider policy of single exchange rate, and also this will completely remove the foreign exchange economic rent and subsidy for a medium and long-term adjustment of the economy from distortions. He also recommended that the fuel subsidy issue should be addressed by critically reorganizing the subsector, including deregulation and decentralization of fuel importation to ensure competition.
Global player PepsiCo is making a move to acquire Pioneer Foods, which is a South African-based food packaging company. It is well known by its locally available goods, including Vitbix, among other brands. Now, this is a deal worth over $1.7 billion, which has actually seen a scale in the price of the JSE listed company Pioneer Foods by a good 30%.
This concludes our evening news. Thank you for watching. Join us next up on our Markets Daily Review. Stay tuned.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Anis Shimbumu, and let's get the ball running. Now, the stock market did come off today by about 0.07% today, settling at 191.7 points after having shed off some of its prior session gains. Now, it would have been such a shock for me for the market to react in this manner, mainly because of how there could have been some inflationary pressure that could have come into the investors' mindsets, mainly owing to a 22% increase within within the fuel price hikes, which is basically a very much inflationary reaction. Now, Citco International Limited and Padenga did cause for a decline in what we do see as a decline on the industrials index by 0.06%, selling at 639. Now, for a week-to-date basis, the mining's index is still up 0.94%, while the Osha index is up by 0.91%. Top 10 index 1.14%. For our laggards and risers today, PPC did lead the set of fallers today, coming off 11.19% for it to settle 195 cents, while we did witness a cassava gain today at of about 2.52% after having settled at 169 cents. Now, BAT, which did trail laggards today, came off 8.86%. Nickels coming off 8.33%. They did also recently release their financial set of results, where they did enjoy a 73% gain within their revenues, which pretty much outpaced inflationary levels within the same period of time, where by March annual inflation was at 66.8%, while their revenues did come up 73%. Now, one of their strongest suits within their business would be their supermarkets business, where they did enjoy a relaxation of the SI 64 statutory instrument there, where some of its products could have also just added to its product mix, also owing to a lot of panic buying that had happened, mainly to some major policy shifts that had happened in the early stages of their second half of their financial year, owing to a cabinet shift there, when Tuli and his friends came into the picture, which pretty much then did bring about some panic buying, which also could have pushed their volumes up, and also mainly because of them being able to be very proactive and joining the bandwagon in terms of price hikes. They did also capitalize on that and had their supermarkets business boast of about a 94% contribution within their revenues of about $773 million. Now, for our forex market, the parallel market did settle at about 9.5, with some market rates going up as high as 9.8 today. Some are very much close within the 10 region, where you would find that the interbank market is still very sustainably weakening on a day-on-day basis, settling at about 8.85 today, after having weakened by about 0.17% on a day-on-day basis, for it to close off within that region. Now, forex market seems to be one of the major reasons why we continue to have such fuel price hikes until such a point in time where we have a much more stable foreign exchange rate. Then we could have somewhat of a much more stable fuel price, which is purportedly around about to a closer, fairer value of around about 12 bond to the liter. I wouldn't know how much more of such price hikes Zimbabweans could take, but we are yet to see where this would continue to take us. Now, for us to just have a much more appreciative look at how such kind of aggregates are going to be moving, we do have, as Equity Access, an economic review and outlook paper that would be set out for Q2 review and has an outlook that goes further into 2020, around about this time next year as well. Some of the aggregates are within that report would be inflation, exchange rates, and a lot much to do with our gross domestic product, where we have officially coined this economy to be in a moment of stagflation, where there's a lot of where there's a runaway inflation, which we do predict to close off the year at around about 334% by year end, and for us to also us also being in a situation where our gross domestic product would be coming off by almost about 4% to 5%, which is pretty much similar and close to the regions where the World Bank and IMF had also pinned our economy growth going towards. Now, for you to enjoy more of such kind of videos and content, please do not forget to like, follow, and subscribe our YouTube, Twitter, and Facebook accounts at Equity Access, and do visit our website www.equityaccess.net. Good evening.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success. Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures, just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication and experience, making us your ideal partner for success.
Welcome back, viewers. It's now time for News Review, and with me on set is economist Tinashe Kadu. Tinashe, good evening and welcome to the show.
Good evening, Iben. How are you today?
Won't complain. Should only get better yourself.
I'm very well.
Beautiful. Now let's quickly talk about the fuel price surge. A 22% jump to prices north of $7. How important are these adjustments?
You look at this, development is something that is actually really worrying, especially looking at what's happening in the broader energy sector. You look at your electricity, your companies now, they were actually substituting your electricity with fuel, with diesel, to be specific. So this jump is actually a major concern, especially to those productive industries. You look at the telecoms sector, they were actually saying that what's prompting that rise in tariffs is to do with unreliable electricity, as well as the increased cost of production due to the substitution of your power with fuel. Then you also look at some companies as well. They were now are running their production plants with fuel as well. The likes of Deribot, to mention just a few. So to me, it's a major concern. And you look at inflation, which is actually approaching your 200% mark. That's something which should raise concerns, especially in the market.
But looking at the trends that we've seen on the markets, is this not something that was to be expected, or is this not actually a figure that is below the prices that we should be seeing the fuel increase by?
Even if it is to be expected, but it's something that authorities should actually guard against. I think it actually speaks to the broader SI 142 issue, where I can say that all these tests in the economy, it's actually a reflection that the instrument it's actually not working, or it's not actually providing the desirable results. If our production or if our pricing is actually accommodated, or if the economy has actually accepted SI 142, it means that everyone will be making his pricing decisions and everything in local currency terms. So we are seeing everyone is chasing after the US dollar, implying that the economy is actually soft dollarized, which I feel that authorities with SI 142, they are trying to move away from what the economy is dictating.
But fuel remains something that we import and will definitely always be pegged against the US dollar. Is that not the case?
If you look at it, if there wasn't SI 142, if we had a bit maybe liberalized the economy, or even allowed the market to dictate the currency path that would have followed, you would find that the fuel subsector might find its way out, like what we did during the 2009-2008 era when we dollarized.
Well, thank you, Tinashe, for the perspectives. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website, www.equityaccess.net. From the Equity Access team and I, Danke, and good evening.